Hello and welcome to Pro Trader Strategies Market Commentary for Friday, April the 26th. My name's Eric Wilkinson. I'm here to teach you some different option strategies that you can then implement into your portfolios, but please do that in your own way. Also remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. Today we got GDP, gross domestic product, one of our major numbers to look at. We got 3.2%, expected to be 2.2%. They did revise last month's number down slightly, but only by a couple of tenths of a percent. As a matter of fact, I think it was just a couple of tenths. So a full percentage point above what was expected on GDP. That is knocking it out of the park, you guys. I mean, I can't explain enough how good of a number that is. It's actually giving me pause. Then we got advanced GDP price index came in at 0.9%, expected to be 1.3%. So we're not really seeing inflation there, but we are seeing some really good growth going on. University of Michigan consumer sentiment came in at 97.2, which is good. Inflation expectations at 2.3%. That'd probably get revised now that we see this GDP number coming up. Although that prices paid number is an inflationary number and not really showing it there. A couple of things. I did a trade on crude oil yesterday. Yes, the man went out. I needed gas, and I only got a half a tank because of my market commentaries talking about the market wanting to roll over and expecting prices to go down. Well, that'll affect the gas prices too, right? I might save myself maybe $2 or $3, let's say, over the next the course of a week before that half a tank gets out there. But anyway, it was a good trade. As you can see here with crude oil back below $63 a barrel, we talked about this in length yesterday about how we were getting a little bit of a topping pattern going on here. It looked like a bit of confirmation also because we could not sustain that level above $63, or sorry, that level of $66. I guess my pin doesn't want to work today for some reason, so I might have to go without that today. My computer's been acting up the last couple of days, so we'll have to see if that thing pops up anywhere soon. All right, so we got that crude oil rollover, tested this $66 a barrel, which was the Fibonacci 38% area. Now we've broken below that 23 fib that I was expecting us to go down to and start to fill in this lull down here at the bottom. Yeah, nothing wants to work right now. So no pin today, you guys. You guys are off the hook. And then we got gold futures. Now we're talking, gold is a flight to safety. It's also an inflationary instrument as well. We're not seeing the inflationary aspect when that GDP price is paid, right? Why is gold moving higher? It doesn't make sense to me other than the fact that it's coming back to the point of control right around that $1,300 a troy ounce. So markets, technical analysis or technicals are trumping the economics today across the board, it seems like. With gold moving higher, we're not seeing inflation. Equities don't really look like they are in jeopardy of a major sell-off at this point with GDP, but everything is acting a little bit bizarre today. For instance, bonds moving higher. We've talked about this many times before, that when bonds are going higher, that means the prices are going higher and interest rates are going down. That's an indication maybe to the Fed that the interest rates should go down. Well, with GDP, the way that it is right now, that lowering of interest rates out the window as far as I'm concerned. So bonds moving higher right now is a bit of a bizarre move. I'm still going to stay short these bonds because I don't think that they are going to lower interest rates, especially now. And then we go over to the VIX. You can see the VIX is coming off a little bit out of those teens again. Sorry, let me get rid of that. Now here's the equities. I would have expected the equities to really have more of a push to the upside with that GDP economic data point. We're only up 32 points in the Dow right now. And then we go over to the NASDAQ. Again, just not seeing the follow through. Yesterday we had a big sell-off. This pattern up here looks pretty toppy to me. This could just be a pause, and we're going to start to roll over as people start to take profits. I mean, this is very hard to not take profits in, I'm sure, for many people, and are waiting for the first shoe to drop. Now, we start rolling over and settle below the 78 Fibonacci right here. that is going to make it look like we are just overextended and going to come back down to reality right around 7,500-ish, in and around there. All right, E-mini S&P is trying to break this pattern here of a topping pattern and then a confirmation. We're trying to retrace that, engulf it in a way. Again, I just think that, even though the economic picture looks pretty good today with the GDP number, that profit taking might trump everything else. The way that the market's moving, the bonds are moving higher, gold's moving higher. That seems to me that there's a money rotation going on here, and we might see the equities start to slough off, especially towards the end of the day. All right, so keep your eyes out for that going forward. Now, here we go. Sloppy, really sloppy. We talked about this yesterday, the slam down yesterday before the open. We rallied back, and then towards the end of the day, we got slammed again. Overnight inventory got short, and of course, there was a battle going on right there near the open of the day. As you can see, we got a big, huge candle there, and market disseminating that GDP economic data points, and you can see we started rallying to the near highs of the day right now. So equity is starting to recover. I think it's based on the technicals there. The rest of the market is making me a little nervous with the way that gold, crude oil, and the bonds are all kind of acting right now. So everything's acting completely opposite of what we would think the levers and pulleys were going to be doing today. All right, on to the equities that I traded for earnings. Actually, I only traded this one. It's 1 o'clock. For me, Arizona doesn't switch time, so I kick back to Pacific time, and 1 o'clock comes up really quick. That's what time we close here on the West Coast. So caught me off guard. I scrambled. I did get in Amazon and pretty much leveraged myself out in it. But I went into the April contract, sold the 1,775 puts in there for right around $2. I was able to buy those back for 6 cents right off the open. Actually, it was about 15, 20 minutes after the open there. So I got out of those. I did try to get into Discovery, Discovery Financial, DFS. And I was going to play this to the upside because based on what we saw with Visa, that it was a good earnings. They jumped. I tried to get in a trade here and missed that. Towards the end of the day, the bell went off while I was trying to adjust my orders and didn't get in. So missed out on that opportunity. I said I was going to play to the upside. Starbucks, I didn't play either. Starbucks came out, and I told you I was looking to play this one, but just didn't get involved in it. I didn't have a real good feel for it. I looked at that one first before I jumped over to Amazon when I realized I needed to get a trade in quickly, and did not play with Intel, thankfully. I didn't even look at any of these trades today, but Intel down about 10% on the day. Must have gotten crushed on their earnings, which they did. They missed on earnings. I'm sure their forward guidance isn't that great because with Bitcoin being as low as it is, chips and all of these mining computers are not selling like hotcakes as they were before. So I think a lot of those miners are pulling back on this. That's going to infect NVIDIA as well. People just not buying those video cards to sustain those mining operations. All right, so we could really see these computer companies start to struggle going forward. And again, I didn't play this one as well. But that's all I got for you guys today. Yesterday's webinar was a really good one. It was on the long call calendar, and that is great for setting up a strategy right after earnings, because what happens is right after earnings we get this volatility crush. So something like Intel or Discovery, you could play to the upside today, still get some good premium for some of those calls in about the 21 days to expiration, right? Because we haven't seen volatility completely come out of this. So we could sell that ball in that front month, buy the ones in the back months, about 150 some days out, 147 I think is what we were talking about yesterday. And that way we get that expansion in volatility for this binary event, and we get the volatility coming out in the one that we short in that front month. So that if you are bullish in Intel, thinking maybe the sell-off is way overdone to the downside and want to play this to the upside, that would be a good opportunity. So check out that long call calendar. It is for a long-term bullish move if that's what you're looking for in something like Intel. And that's all I got for you guys. Hope everybody has a great weekend. And if you can't take that, take it easy.